Thank you for tuning in to this video on Minnesota paid leave and what agricultural employers need to know. The University of Minnesota Extension's mission is to make a difference by connecting community needs and university resources to address critical issues in Minnesota. Our team, called the Extension Agricultural Business Management Team, is a resource for agricultural employers, agricultural employees, and farms on topics related to the business side of agriculture. Our team brings resources and teaches about the things that are important to keep farmers and agricultural businesses in business. Things like record keeping, information about taxes and policies, as well as other topics, including HR topics, which is the focus of today's video. My colleague Rob Holcomb and I, my name is Suzanne Henricks, we are both members of the Agricultural Business Management Team, and we will be recording today's video. We will post this video on YouTube, and we're happy to answer questions through email or phone, and our phone number and our contact information is located at the end of the video. Minnesota Paid Leave is a new program coming to Minnesota starting on January 1st, 2026. We are using slides that the Minnesota Paid Leave program has put together. We'll be using the slides to guide our video today. There are steps employers must take as you prepare to comply with this new program. Rob and I are educators and we aren't attorneys. Minnesota Paid Leave is complex and it's evolving, and we are presenting what we know and how we understand it today. We will be focused on an overview today of Minnesota Paid Leave. We'll talk about who is covered and what leave is available, and some of the pieces between Minnesota Paid Leave and another program called Sick and Safe, which is another program in Minnesota. We'll compare the two of those programs together. And then Rob is going to go through some of the details you need to know as an employer about wages, job protections, key deadlines that we want you to pay attention to, and the employer's role in reporting wages and premiums and other things you need to do to comply with this program. Other states have enacted a similar program as Minnesota Paid Leave, and we're not the first ones. But in other states, some of them have had contributions start ahead of the actual program. It's not the case here in Minnesota. The program starts on January 1st for both employer-employee contributions as well as employees being able to take paid time leave starting January 1st. So other states, such as Oregon, they had a period of pre-funding the program where employers and employees had to pay into the program. We don't have that here in Minnesota. Both the funding of the program and the ability to use the program are starting at the same time. The Minnesota Paid Leave Program was enacted by the Minnesota State Legislature in 2023. It was updated in 2024, and now it's being launched January 1st, 2026. This is paid family and medical leave coverage for workers. The law provides job protections and partial wage payments for employees to take leave for covered activities. Paid leave is funded by premiums that are contributions by both the employee and the employer. The payments go to the state, and the state will send payments to employees that take paid leave. It comes directly from the state. It starts on January 1st. First, a little about the program. You can see that on this slide there are two parts to the slide, and on the left it's called medical leave, and on the right is called family leave. So let's focus on the left side. On medical leave gives you time to care for yourself or to recover from a serious health condition. These illnesses need to last at least 7 days and have certification from a healthcare provider that the leave is necessary. So that's called medical leave. The Minnesota Paid Leave also covers family leave. And family leave can be for a variety of activities that are described on the right-hand side of the page. One could be welcoming a child into your home. It could be caring for family members if someone is deployed or on active duty. It could also be caring for a loved one who needs your assistance due to a serious health condition, or it also could be caring for someone who needs help during a safety issue. It might be something that you need to help out with during that time period. So Minnesota paid leave allows employees to take up to 12 weeks of either medical leave or up to 12 weeks of family leave in a calendar year. And as you can see in that purple bar on the bottom, it says you can also have up to a maximum of 20 weeks total in a benefit year. So the benefit year starts on the first day of whichever leave you would take first. So if you had to combine both leaves, let's say in the example of someone who might be expecting a baby, they might be put on medical leave and they have to be at home before the baby is born, and then they're also going to take some family leave afterwards. That occurrence or that calendar year would start on the first day of that first day of leave, and in this case it would be medical leave. So 20 weeks is the maximum employee can take for for a combination of the leave. So who is covered on Minnesota paid leave? Well, we have a slide here that has quite a few different groups of employee types that are covered. All public and private employers with one or more employees in covered employment are included in Minnesota paid leave. So you can see there is a small list of excluded employees down in the right-hand side under the brown colored header. It's a small list of excluded employees, federal governments, can't opt in, exempt seasonal hospitality employees, and railroad employees cannot opt in. Employee groups that are not covered but can opt in are independent contractors, self-employed individuals, and tribal nations. There is a huge list of included employees, and that's why you see that there are not very long lists of those who are excluded from this program. It covers a wide swath of employees. The program covers most all employees. Some of you might be wondering if under the brown header called Not Covered section, where it mentions exempt seasonal hospitality employees, if some of your seasonal agricultural employees might qualify. Certain seasonal employees only applies to employees in the hospitality industry as defined by the Minnesota State Statute 157.15. A seasonal employee who is not covered by Minnesota paid leave is one who is employed for no more than 150 days in 52 consecutive weeks. So I'll say that again. A seasonal employee who is not covered by Minnesota paid leave under this hospitality rule is one who is employed for no more than 150 days in 52 consecutive weeks. So in this, an employer must show that seasonality in business receipts, so it's really proving that it is a hospitality seasonality business, and also that the employer must apply for a seasonality exception. So I just wanted to cover that because that is something that is kind of called out, but agricultural workers and part-time or full-time, they're all covered under this Minnesota paid leave program as noted up in the green bar on this slide. So what exactly does it mean to be covered under this program? Well, this slide tells us a little bit more about that. There are two categories, A and B. As an employer, you need to look at your employee list and look at each person individually to see if which one of these categories they fall into. So let me explain this a little bit. Minnesota paid leave covers most all employees working in Minnesota at least 50% of the time. So even if I was to live in a neighboring state but work for you on your farm or in your business at least 50% of the time that is in Minnesota, I'm covered under this program. If I only work for you even just one day a week, but that one day a week I work is in Minnesota, I am in covered employment. So consider that. Even part-time employees, this affects. So if I meet this criteria that I work in Minnesota at least half of the time, it doesn't matter where I live. This could be areas of Duluth or Superior, or maybe Grand Forks, East Grand Forks, Fargo, Moorhead, or even on this Iowa state line. It doesn't matter where you live as long as you're working in Minnesota. So you can have an employee who lives in Minnesota. You can have the converse. If I was to live in Minnesota, but I work 50% of my time or more across the state line in North Dakota, then I wouldn't be covered. So it can work conversely too. But most of the time we're going to be talking about people who live in Minnesota, are working in Minnesota, and they will be covered under this program. So when you reach the 50% working in Minnesota, I don't care where the farm or business is headquartered per se. Um, if if I, as the employee, work at least 50% or more of my time in Minnesota, I qualify for the Minnesota Paid Leave Program. So it could be that you work for an employer that is out of state, but you are in Minnesota 50% or more of the time, then you qualify for this Minnesota Paid Leave Program. So this is the simplest way to look at it if an employee is covered or not covered. Not every employee works necessarily in the same state all the time, and that's what the second category is getting at, B, on this slide. So some employees don't work in any single state for at least 50% of the time, and that could be confusing. So let me give you an example. It could be that you farm at the corner of South Dakota, Iowa, and Minnesota. As an employee of yours, I work 33% of my time in Iowa, 33% of my time in South Dakota, and 33% of my time in Minnesota. This is the point where you care where I live in this category B. So if I have this scenario and I live in Minnesota, but I split my time working in a variety of states, then I qualify for Minnesota paid leave because I live in Minnesota, but I don't have a clear percentage of time working in any one place. So that's the second way to assess if an employee qualifies for the program. It's a little bit more complicated, but where we live does matter in that second way to assess if an employee qualifies. There is another program in Minnesota called the Earned Sick and Safe Time Program, and it can easily be confused with the Minnesota Paid Leave Program. So Rob and I thought it would be important to kind of go over what the differences are between these two programs, Earned Sick and Safe Time and Minnesota Paid Leave. There are some differences here on this screen. The Earned Sick and Safe Time started last year. So in 2024, at the beginning of 2024, and sick and safe time is paid time off employers must provide to employees in Minnesota for certain uses. So I won't go into those uses, but I did want you to be able to know about this and the differences that are apparent. So this program, Earned Sick and Safe Time, is for paid time off for approved leaves, and it can be used as either supplemental or a substitute payment for time off for earned sick and safe time if you're sick for a couple of days and need to stay home from work. So this program, Earned Sick and Safe Time, is based on earned time. You earn 1 hour for every 30 hours worked. So that's an important piece of this. We put together a comparison chart for you here, and really the differences are short and long term. So Earned Sick and Safe Time, the one that started last year, is really for time that an employee needs to be away for short-term absences. 1 day, 2 days, maybe 3 days. They're just sick and they need to stay home, or someone that they're caring for is sick. So that's the Earned Sick and Safe Time. That is a payment that comes from the employer to the employee, but it is a state program, so it flows in that way. Compare that to Minnesota Paid Leave, which is funded by employer-employee contributions, and it's much more for long-term absences. up to 12 weeks in time, like we talked about a little bit ago. The payment comes directly from the state to the employee. It doesn't flow through the employer in this case. So that's the difference between those two programs. So if you're interested in learning more, you can put into your search engine on your computer comparison of earned sick and safe time and Minnesota paid leave, and it will come up with this really neat document which tells you a little bit more about the differences between earned sick and safe time and Minnesota paid leave, especially since they both have rolled out relatively close to each other, a couple of years apart. So I'm going to transition over to Rob. He's going to carry the next few slides, and then I'll be back in a little bit.
Hello, my name is Rob Holcomb, and I'm an extension educator with the University of Minnesota. I'm an enrolled agent and work in the area of agricultural business management, specializing in ag risk management with emphasis on taxation, farm analysis, business planning, and labor management. You've already heard from my colleague Suzanne Hendricks. For part two of this presentation, I'm going to share some additional information regarding the Minnesota Paid Leave Program. While this presentation is geared towards ag employers, most of this information is relevant to all employers. Minnesotans can receive up to 90% of their usual wages, up to a maximum benefit. Based on 2025 numbers, the maximum weekly benefit is $1,423 per week. It's important to note that lower wage workers receive greater support, meaning they get a higher percentage of their paycheck covered while on leave. For example, 90% of wages are replaced for earnings up to 50% of the state average weekly wage. Once your application is approved, or once the employee's application is approved, the state will make payments directly to the employee. Employees will be able to choose how they receive the funds, typically through direct deposit or prepaid debit card. It's important to remember that these payments are administered by the state's Department of Employment and Economic Development, or DEED for short, not the employer's payroll. Please also note if you receive payments from unemployment insurance, workers' compensation, or Social Security disability insurance during an absence, you're not eligible for paid leave payments. Under the law, employees are provided certain job protections. After a paid leave absence, the employee is entitled to 1. Right to job restoration or reinstatement, 2. Continuation of health and group insurance, 3. Protection against retaliation and interference. Now, let's look at these in a little more detail. Under the right to job restoration, generally when an employee returns from a qualified paid leave, the employer must restore them to their original job or equivalent position. An equivalent position must have the same pay, benefits, and working conditions. Employees also cannot lose any seniority they accrued prior to the leave. Also, the waiting period. The job protection takes effect 90 days, 90 calendar days after the employee's date of hire with the employer. Number 2, continuation of health and group insurance. The employer must continue to fund their portion of the employee's health care and other group insurance premiums while the employee is on paid leave. The employee remains responsible for paying their usual portion of the health care and other group insurance premiums during the leave. Protection against retaliation and interference. Employers are strictly prohibited from interfering with or retaliating against an employee for exercising their rights under the paid leave law. This includes actions such as firing or termination, demotion, cutting hours, or further disciplining the employee. As employers, you have four main roles in this program. Let's focus on the first, reporting and premiums. To streamline the process and reduce administrative burden, the paid leave program uses the same online reporting system as unemployment insurance, or UI, to collect quarterly wage data for employees. The wage detail information necessary to determine an employee's eligibility and benefit amount. If you already submit UI wage detail reports, the paid leave requirements are going to be identical. Agricultural employers in Minnesota will generally need to set up a paid leave only account with Minnesota Unemployment Insurance System to report hours and submit premiums for the paid leave program. Now, here's a breakdown of the two different types of accounts and why the paid leave only account is typically needed for ag employers. The paid leave only account is for employers whose employees are covered by Minnesota paid leave but are not covered by the state's unemployment insurance program. Agricultural employers, many ag employers are exempt from state unemployment insurance requirements, but they're required to participate in the Minnesota paid leave program. Therefore, they need to register for a paid leave only account and required to submit their quarterly detail reports and premium payments. All right, now I'll note this right now. Commodity wages or wages paid in kind are qualifying wages under the Minnesota Paid Leave Program. I will address how those are reported a little bit later. All right, now the joint unemployment insurance paid leave account. This is an account for employers whose employees are covered by both unemployment insurance and the paid leave program. If an ag employer already has a UI account because they meet the UI coverage thresholds, their account may be converted or function as a joint account. All right, so in summary, agricultural employers are going to need to set up that paid leave only account, and uh, all other employers are probably going to be able to run that through the already existing unemployment account that they were using prior to the setup of the law. Now, a couple other important components that we need to look at here. All employers will need to set up a second account component, a paid leave administrator account. This separate account is used by the employer's designated administrator to review employee leave applications, view state determinations, access other specific paid leave functions. It must be set up on the Minnesota Paid Leave website after the administrator is designated in the main employer account. Okay, you will be prompted to set this up upon your initial account setup. Employers in Minnesota have the option to provide their employees with paid leave benefits through an equivalent plan instead of participating in the state administered Minnesota paid leave program. This often is referred to as an exemption. The equivalent plan needs to meet or exceed the coverage and benefits offered by the state plan. Now, the key requirements are the equivalent plan needs to provide equal or better benefits than the existing state plan. This includes leave types. The equivalent plan must cover all the same qualifying types of leave. Duration wise, it must provide equal or greater length of leave, up to 12 weeks of family leave, 12 weeks of medical leave with a combined maximum of 20 weeks. Also, under benefit amount, the weekly leave payments must be at least equal to the state plan's payments. Employee cost, the cost to the employee cannot be more than what they would pay under the state administered plan. Coverage wise, the plan needs to cover all employees who would be covered under the state plan. Continuation of coverage for former employees, coverage needs to continue for 26 weeks after separation or until the individual is hired by a new employer. The plan needs to pay benefits for the full time of the leave. Also, job protections. You must offer job protections that are equivalent to or superior to the state plan. In other words, job restoration after 90 days of employment. There's two types of equivalent plans that the employer may consider. Insurance carrier plans, a plan covered by a private insurance carrier that's been certified by the state, or a self-insured plan, an employer administered plan that has to be backed up by bonding. If you intend to use an equivalent plan starting January 1st, 2026, your request must have been received by November 15th, 2025. Requests are submitted through the Paid Leave Administrator account. If you miss the deadline, the earliest your equivalent plan could start is the beginning of the following quarter, which begins April 1st, 2026. Regardless of the plan type, you still have to submit quarterly wage detail reports and comply with employee notification requirements. Now, another key role for employers is to educate and inform. This is a critical step right now. We do have the deadline for employee notification is December 1st, 2025, and you have to hang that workforce poster that we talked about earlier. That workforce poster is uh, that workforce poster is available for download at the deed website. It needs to be hung in a conspicuous place in English and any language spoken by 5 or more employees or independent contractors. You need to notify individual employees directly in their native language. Minnesota Paid Leave will provide the required poster and model notification letters in multiple languages. Okay, here's an overview of the employer's role. All right, funding and reporting premium payments. Employers must contribute to the program's premiums payroll through payroll tax and may deduct a portion from the employee's wages up to 50% of the total premium. The employer must cover at least 50% of the total premium. Regarding wage detail reports, employers are required to submit quarterly wage detail reports to the state. This uses the same system as the unemployment insurance portal and is essential for determining employee eligibility and benefit amounts. Employee notification, we just talked about that, but employers need to display the required paid leave workplace poster where employees can easily see that. This needs to be in English and any other language that is the primary language for 5 or more of their workers. Individual notification, employers need to notify new and existing employees in writing about the rights and benefits of the program. For existing employees, this notification is due December 1st of this year. Administration and coordination. On the account setup, employers need to create an employer account and designate a paid leave administrator to manage their obligations. Under job protections, employers must provide job protection generally by restoring an employee who's worked there for more than 90 days to their original position or an equivalent one upon returning from leave. Healthcare continuation, employees must generally continue to pay their portion of the employee's healthcare insurance premiums while the employee is on leave. And plan choice, of course, the employer needs to make a selection whether they're going to go with the state plan or go with an equivalent plan. Reporting wages for Minnesota paid leave is primarily handled through the unemployment insurance system, as the program utilizes the same identical portal. All right, who must report wages? Nearly all Minnesota employees with at least one employee who's not an independent contractor are required to report wages for paid leave. This includes employers who are not covered by the unemployment insurance program. Another example of that would be some religious organizations, nonprofits, and government entities. How to report the wages? We do that through the online system. Employers must submit quarterly wage detail reports through their employer account on the Unemployment Insurance Minnesota website. All right, and we've already talked about the two accounts. I mean, you may have that joint unemployment insurance account, or you might have the paid leave only account. Information to include on those quarterly reports is going to include first and last name of the employee, social security number, wages paid, hours worked. The definition of wages used for the paid leave program is the same definition used for the unemployment insurance program. Reporting schedule and key dates. Wage detail reporting is done quarterly and the deadlines align with the unemployment insurance schedule. Reporting actually started in the fourth quarter of 2024. If you are an individual that missed that, just pick it up at the current level. You check with your accountant. You may want to go back and retroactively put some prior reports into the system. The wage detail reports are used to calculate the paid leave premiums, which employers and employees contribute. The first premium due date is going to be April 30th of 2026. This is going to be for wages paid from January 1st through March 31st of 2026. The deduction of the employee's portion of the premium may begin January 1st, 2026. So, quickly summarizing the action for employers. First of all, we need to register for an account. If you don't already have one, or you need to go in and set up an account, submit those quarterly wage detail reports through your employer account, and also make sure that you're including all the employee information with that. The total premium rate for 2026 has been set at 88 hundredths of 1% uh, of an employee's wages applied to the Social Security cap, which in 2025 is 176,100. This rate covers both medical leave and family leave. Employers can begin deducting the employee share of the premium starting January 1st. The first quarterly premium payment is due by April 30th of 2026. Small employers, employers with less than 30 employees, pay a reduced rate of 66 hundredths of 1%. Employers' premium rate will be confirmed upon account setup. For the payroll examples, I'm using the 88 hundredths of a percent for the premium rate. All right. To manage the program, employers need two accounts. You need the employer account on the UI system. You also need to set up that paid leave administrator account. This is where the employer is going to be able need to designate a paid leave administrator, the main point of contact through the unemployment insurance portal. All right, premiums are shared between employers and employees. Employers must contribute a minimum of 50% of the total premium. Employers can deduct up to the remaining 50% from the employee paycheck, but they may choose to pay more than the required portion for some of the employees, for some or all of the employees. It's critical that premium deductions don't cause an employee to earn less than the required minimum wage. All right, that's that is really critical. Now, I'm running an example here that will just talk through this slide. I've got a sample paycheck. Now, this is a farm employee that's making $40,000 annually. It is an hourly individual. This individual's getting a biweekly paycheck, and the amount of the paycheck in this example is the biweekly paycheck is $1,538. That's the gross amount of the check. So the premium that would be due for this particular paycheck would be $13.53, and that's simply done by multiplying the gross amount of the paycheck by the premium percentage that's shown there. Now, in this example, I have half of the premium that's going to be withheld from the worker's paycheck. So this is a screenshot of a worksheet that I use for putting together 941s and 943s. We've got a check to John Doe. The gross amount of the check is 1538. I just made up the federal and the state withholding on that. I think I did 10 and 5% on that. But in this case, the $6.77 is half of the 1353. All right, the total premium for this check would be 1353. Half of this can be withheld from the employee. All right, so that would be one way of reflecting this. Now, the uh, this is an example without withholding. All right, identical. All right, identical numbers and everything. The main thing worth noting here is there is no Minnesota paid leave that's being withheld from this particular paycheck. All right, but this is what a paycheck would look like if the employer pays both halves of the Minnesota paid leave. The employer in this case is not doing any Minnesota paid leave withholding. The employer is paying the employee share. All right, it's important to note that the employer is paying both portions. The W-2 in this case is going to need to be grossed up by the amount of the employee's premium paid. All right, so in other words, if the employer is paying both halves of the Minnesota paid leave, the portion that the employer is paying for the employee does get added to the W-2.
Now we're going to turn our attention to how employees can coordinate benefits. While someone is out on a qualifying leave for Minnesota paid leave, it is possible to coordinate benefits. So Minnesota paid leave knows that it is the new kid in town and that many employers have already been offering benefits to employees. Some more guidance is coming out about coordinating benefits, but here's what we know so far about coordinating benefits. So the program allows that employees can designate certain benefits as supplemental benefits. So you can add on other benefits to the Minnesota paid leave benefit. These can be used to make up the difference between like a partial and a full wage replacement, or in other words, can top off an employee's wage while they're on leave. So, for example, an idea might be if the Minnesota paid leave is being used to pay for, let's say, 2/3 of an employee's regular wage while the employee is on leave, PTO can be used to top off or pay the remaining third so that that person's pay remains consistent while they're on leave. An employer has the choice, you have the choice of whether to offer that benefit, and an employee has the choice of whether to take that benefit. So those are some considerations that you'll make as you make decisions about these things in the Minnesota Paid Leave Program. Another way for a person to combine benefits might be in using PTO or sick leave while they are on medical or family leave through the Minnesota Paid Leave Program. These would be considered an offset. So other payments, such as sick leave or PTO, they might be received by an employee that are not supplemental benefits like we just talked about before, but they're generally considered offsets. So this might be in the way of a payment that reduces an applicant's Minnesota paid leave benefit payment. So for example, if an employee chooses to take a full sick day in the middle of their leave instead of their Minnesota paid leave benefits on that day, their benefit amount would be offset by that day of PTO or sick leave. So it could be that they're on family leave, but they themselves need to go into the doctor for an appointment, and that they decide to use PTO or sick leave for that day instead of their paid leave time for that day. So that's something that is possible in this combination of benefits that paid leave is offering. There are things that you need to take action on as an employer in the next few weeks in order to notify employees about this program. So, notifying employees about the availability of Minnesota paid leave is a part of the responsibilities here, and there are two notifications required of all employers. The first one is the one in the green sign. It's hanging posters. So it's a simple thing to do to download a poster from the website, Minnesota Paid Leave website. Look for the employer section of the website, and there are posters that are created and available ready for you. Print a couple off, put them in places such as your break room or in an entrance where there's a lot of people that come and go that work at your place. And if you have if you have 5 or more employees that speak a language, you need to also print it in that language as well, so in their first language. So make sure you pay attention to that as well. The second way to notify people is to include a sample letter or include a letter for each employee. Give that to them so that they have time to read it, maybe even take it home and look it over with their family. But each employee must be notified about this in their native language. So if you have people that are other languages other than English, make sure to print it in their first language. And sample letters are available at the Minnesota Paid Leave website under the section for employers. So those are the two notification things you need to do. They're supposed to be done in December so that people have a few weeks to be notified and be informed about Minnesota paid leave.
Small employers receive a reduced premium contribution. To qualify, an employer must have 30 or fewer employees, and their average employee wage must be 150% or less of the statewide average, which is $107,016 in 2025. For those who qualify, the employer's standard contribution is reduced by half, but this reduction contribution does not change the amount owed by the employees. The current published small employer rate is 66 hundredths of 1%. Just to clarify, if an employer qualifies as a small employer, the employer's portion of the premium is reduced. The employee portion is not. Notices will be sent out very soon from the state notifying employers if they qualify as a small employer. Furthermore, starting January 1st, 2026, small business assistance funding will be available for qualifying small businesses, 30 or fewer employees, and meeting the wage threshold. This funding, up to $3,000, can be used to hire temporary workers or increase their wages of existing workers, substituting for absent employees. Conversely, be aware of benefit offsets. If an employee receives certain payments like unemployment insurance, workers' compensation, or Social Security disability insurance during their absence, they're not eligible for paid leave payments. If a payment's not specifically designated as a supplemental benefit, it's likely considered an offset that could reduce paid leave payments. The employer's required share, not taxable to the employee. The Minnesota paid leave premium is split between the employer and the employee, with the employer required to pay a minimum of 50%. The employer's required share of the premium is treated as an excise tax for the employer and is not included on the employee's taxable wages in box 1, 3, or 5 on their W-2. The employee share paid by the employer is considered taxable income. When an employer chooses to pay the employee's portion of the premium, also called an employer pickup or voluntary payment, that amount is considered additional compensation to the employee. That amount must be included on the employee's W-2, and that would be included in box 1, 3, and 5. All right, now the exception to that reporting would be for commodity wages, which are only going to be shown in box 1. For commodity wages, we don't put anything in box 3 and 5. So that would be the one difference. But commodity wages are still considered wages that qualify for Minnesota paid leave. All right, so in summary, if an employee pays 100% of the total premium, the additional 50% that covers the employee's mandatory contribution is treated as a taxable benefit and does get added to the W-2. All right, so preparation steps. This is more or less wrapping everything up. I'm just going to work the slide here. So for right now, if you're an employer and you're watching this, you know the first things that you have to do is, we have to worry about reporting employee wages. All right. Uh, First of all, I mean, of course, you need to set up your account, whether it's a joint account or whether it's a paid leave only account. You need to make decisions on whether you're going to go with the state plan or whether you're going to go with an alternate plan for coverage. And even if you decide this at this time, post November 15th, you're going to be pretty much locked into the state plan for the first quarter of 2026. You also need to designate your paid leave administrator. When you set your account up, many times if it's a sole proprietor, these two are going to be one and the same. But what you're doing is you need to set up an administrator account. That's where all the busy work's going to happen as far as reporting and everything. That's the person that's going to be responsible for doing the reporting. All right. Remember, by December 1st, all right, you got to notify your employees and display the workforce poster in that regard. Here's some helpful links. Now, the helpful links here, because again, the fourth role for employment is collaboration and improvement. We'd like to provide some links here. There's there you know the top link here is for frequently asked questions, FAQ. That's a link. It's going to take you to the DEED website. That's a well-populated list of FAQs. Oftentimes, when I've received questions about this, oftentimes those are included in the FAQs. It's worth looking at and taking a peek at that. Secondly, we have the link to go to the unemployment insurance website to set up an account. All of that setup information is going to be located at that link. I would strongly encourage everyone to look at this third link, sign up for paid leave updates. Now, these are going to be updates that are coming from the state, and as late breaking information comes out on there, you're going to get notified about that. This fourth link, the send deed questions, when you click on that link, it's going to take you to a site where you're provided contact information to either call deed, or you can send the equivalent of an email to them in the form of a question. Folks, I will tell you, I have been very impressed with the uh, quick nature that all of my questions have been answered from that group. I mean, they're very responsive to questions. I encourage you to be active with that. Now, here's the contact information for Suzanne Hendricks and me. And I would encourage you, if we can help you out in any way, please feel free to contact us. I can't speak for Suzanne, but I know that I do a lot of teaching in the wintertime and do a lot of travel. Email is probably the best way to reach me. But I certainly don't want to discourage you from trying to call. But I'm oftentimes this time of the year out of the office. With that, folks, you can also reach the Paid Leave Contact Center at the two phone numbers that are listed on the screen. I'll leave that to your perusal. Also, you can reach them at info.paidleave.minnesota.gov. All right, and that also is another source of contact. With that, folks, I want to thank everyone for listening today, and I want to thank everyone for joining us. Please feel free to reach out to us if in the future if we can be of any assistance. And with that, I wish everyone a good day. Thank you.